is gold still a good place to be putting your money in? And where else are the hot commodity opportunities? Now, to give us her take, we're joined by Danske Bank's senior analyst, Christin Tuxen. Christin, thank you so much for joining us. Now, in terms of what we're seeing, we talk to investors every day, and they really seem to be split down the middle in terms of the metal prices. Some say copper is dangerous because growth is going to slow significantly in China. Others say, well, it may rise because we may get more demand elsewhere. What's your take on it?
Well, if you believe in a global recession, copper is definitely not the place to place your money, but that is not our call. We think that we will see notably China and the rest of Asia rebounding, growth rise towards the end of the year, and this is something that will put upward pressure on metal prices in general, and copper could be the first place where we are likely to see this.
But so we also had this manufacturing PMI data from China. We have a Bloomberg survey saying that growth will slow 5% from the 9.5% that we're seeing now in the next 5 years. Are you not concerned that China will slow? And if it slows, even if we don't talk about a hard landing, that's going to put pressure on copper?
Well, it certainly will if we're going to see China having very weak activity for a while. But our economists are fairly confident that some of the headwinds we have seen earlier this year, dragging notably Asia and the rest of the world down growth-wise, well, these headwinds are fading now. And for copper, I think it's really worth pointing out that we have seen positioning data indicating that investors have now actually cut their long copper positions quite significantly. So positioning risk is fairly minimal for copper, and also there is anecdotal evidence that some of the bonded warehouses where there was a lot of copper in store previously in the year, well, they are now at fairly low levels, and that is why we think that we should really watch Chinese import data going forward, because I think that is where we could see buying coming in the final quarter of this year.
So you expect a rebound in price. Now, if we just check in on the LME copper right now at 7,251, how much is it going to take in the next 3 months?
Well, over the next 3 months, it might be slightly difficult to see a major rebound. But we think that when we turn into the first quarter of 2012, there will be some help from, well, the activity story that we have, and also the fact that the dollar is likely to face some headwinds. And then towards the end of next year, we think that 10,000 is something that the copper market will test again.
Oh, wow, that's a pretty impressive figure. That's almost like a third more than what we're seeing now. Christin, talk to me about gold. Now, we had that 1,900 level just a couple of weeks ago. A lot of investors then telling us we'll definitely reach 2,000. It didn't actually touch 2,000. We went back to 1,700. Again, upside potential?
Well, I think in the near term there could definitely still be some potential for gold to bounce back. We've seen that, there has been some closing down of long gold positions after margin requirements were hiked and inflation expectations have come down and the dollar has strengthened. That has been weighing on gold. But for the next couple of months, I think euro debt crisis will still be weighing on all risky assets, and gold should still be a safe haven in this respect, also considering that one of the other safe havens that used to be in place, namely the Swiss franc, has become less attractive from what the S&P has done. So still some upside to gold, also from the fact that we have very low interest rates and set to have so for an extended period of time, according to the Fed.
And what about oil? Because this is another commodity that, of course, has some kind of... I mean, if we go in a recession, demand is going to fall. But at the same time, OPEC is there to defend the price stability of oil.
Yeah, well, again, because we have a fairly bullish call on the demand side due to our growth story, well, we think that there will be some tightening in global oil market balances, both this year and also next year. Of course, we are seeing Libyan supplies gradually come back, but at the same time, we think that we will also see OPEC, notably led by Saudi Arabia, scaling back on production from the levels where they are right now. Saudi Arabian production is around a 30-year high, and that is levels that will not be sustained if Libya comes back. So that is going to mean that we will see a tighter oil market balance next year, stock draws globally, and hence upward pressure, but not the price rises we have seen in 2009 and 10, of course.
And so, Christin, this is overall basically based on the assumption that we're not going to see a recession. If we do see a recession, will you have to change your forecast fairly quickly?
We would have to do that, yeah. But I think there are a range. We should be keen to point out that there are a range of the headwinds that have led us into this fairly severe slowdown, admittedly. Well, these are fading now, and that is going to mean that the inventory cycle is giving support, and that is going to help commodities, we think, in 2012.
All right, Christin, thank you so much. Christin Tuxen, their senior analyst at Danske Bank in Copenhagen.